Hi, I'm Dave Dinkel with a 2-minute tip of what I called a 30-day challenge. Warning: the following closed deals do not include any assignments or JV transactions. They also do not include any students' deals that are funded with their own money. How many more of these are there? This is an estimate on my part. It's not scientific, but for every deal that I fund, there are typically somewhere between 7 and 15 more deals that I don't see because they're done by JV or assignments. If they're done by JV transactions as a credit on the HUD or an assignment, the profits are significantly smaller in almost every situation. That's why I try and focus students on learn how to get larger profits and do double closings. So this is a summary of 30 recent deals. In my other videos, where I break down the HUD into an upper and lower part so you can see the numbers, it looks exactly like what you see here. This happens to be day 1. This one is listed on the MLS and it is a probate. And I go through A to B and then B to C, and I show you some other things in this particular situation. So there's only 5 parts. Because I'm doing 30 of these, there's more than 150 slides. It would probably take an hour and a half or 2 hours to go through each one. What I've done is I've broken them down, as you see here, into a very simplified snapshot of the entire transaction. But I'm going to give you a summary so you can look at the numbers yourself in detail. This is the second one, third, fourth. Now if you'll notice, there's only 4 slides here, and the reason is I didn't include some extra information as I did in the first 3. Don't worry about it, it doesn't matter. And there's the first 6, and this is in fact the second 6. Remember, I'm headed for 30. In all of these, the point is to look at where the deal came from, whether or not it was listed on the MLS, and how much money was net profit after a deduction for any earnest money deposit or any other cost or expenses on the HUD. These are all net profits that you'll be seeing. Here again, I'm going through the third set of 6. This is the 4th set of the 6th. Now, I'm doing this for a very specific reason, and the reason is to prove to people that want to be open-minded about what real estate investing is about, is that you can do these deals where you are, wherever you are in the country. Are the profits always going to be this large that you'll see? The answer is yes and no. Yes, if you understand how to make larger profits by finding motivated sellers, not listing agents who in fact are controlling the transaction, who in some cases may be keeping the transactions for themselves by hybridization, as I call it, or off-market properties. You'll see in these 30s one that I knew for sure was an off-market or pocket listing. So these are in fact the last of the group. And now what I'm going to do is go on to the summary of these transactions. This is the summary of the data. This is the wholesale number, whether or not it was listed. That's the pocket listing there. Not listed. The earnest money deposit. And I put earnest money deposit for a very specific reason. I hear this all the time. I just had one where a listing agent wanted 5% of the list price on deposit with the signed contract. After the inspection period, another 5% of the property happened to be expensive enough that those 5% each equated to $40,000. So going into the transaction, there was $80,000 essentially at risk once you went past your inspection period, as well as the fact that the seller wouldn't disclose whether there were open permits. There were open permits, and it was a lien issue and a lot of other things going on. So you have to be very, very careful if you're going to do this, that you have somebody to be a backup for you, specifically a closing agent or a mentor who can say to you, look out for this. So in these cases, you'll notice that there are all sorts of deposit sizes, from as little as $50 down here to as much as a $100,000 deposit. Why would somebody put up $100,000? Because it was a heck of a deal. Did they have $100,000? No. They borrowed the $100,000 to put up. Why would they do that? Here's the reason right here. They netted a profit of $88,000 on the double closing, no money in the transaction of their own. So I'm going to go through the sources because everybody says there are no deals specifically listed and where are the deals coming from. Now this is a snapshot in time of where these deals came from. And for example, NOOs are non-owner occupieds. Now, why are they selling it? There can be any number of reasons. It can be a probate. It can be a pre-tax deed sale, it can be a pre-foreclosure, but I can't tell that by looking at the HUDs, and I don't necessarily ask the students all the time because it doesn't matter where it came from. I'm only concerned with closing the transaction for them. So if you'll notice, there's 15 properties that are listed on the MLS out of the 30, which means there's also 15 properties that were not listed. So an equivalent number of listed properties and non-listed properties as the source of the transaction. There's 22 of 30 that did not have an earnest money deposit. And if you say to me, well, that's impossible, what I want you to notice on here is REOs. Now we're talking about banks or sellers. Look at the earnest money deposit on that. How can you do a deal with no earnest money deposit? I talk about it elsewhere in all of my materials. Average wholesale profit on 30 recent deals, $29,753.55. And what I'm going to do is go through the summary of the deal sources so that you can see, the question comes up, what were the most profitable ones? So what we're going to look at now is the deal sources and the average profits. These are the sources. City liens, there was only one. Driving for dollars, there was 5. Non-owner occupied, as I mentioned before, there was 11. But the non-owner occupied could have fallen into some other categories like driving for dollars, probates. They could have been transfers, any number of things. Probates, there was 6. REOs, that's bank-owned properties. There was 3 of those that were sold. And W to W are wholesaling to other wholesalers. There was 4 of those. Obviously, that's the percentage. If you said to me, what's the most exciting one, the best source, it's non-owner occupied. But there's a deeper reason why they're non-owner occupied. Why has the homeowner given up the ghost and moved on? Those are a second layer of searching. So here's the average profit. City liens, much overlooked area, 36,000 and change. Driving for dollars, 29,009. Non-owner occupied, 25,000. Probates, 26,000. REOs, 27,000. And wholesaling to wholesalers, $45,000 average profit. Now, if you're doing wholesaling to wholesalers and you're not making substantial profits on those deals, you're not doing them right. And I'm not pointing a finger at you and saying it's your fault, but frankly, it is because you don't understand how to do them. If you have a small buyer's list of substantial other investors who are wholesalers, you need to expand your buyer's list dramatically because those guys will take advantage of you. That's their business. If you hear the question, what did you pay for this? It's over with because all they're going to do is say, you're a pig and I need this price. They may not say you're a pig to your face or on the phone, but they are going to say to you, it's not going to work for me. This is the price. If you're in an area where there's 2 or 3 of those guys, they'll get together and say to each other, look, if Dave comes over, he's got these deals, he's always got 20 or 30,000 in them. Even though they're great deals, we want 25 or 30,000 in the deals. And that's what they do. They offer you 1,500, 2,000, 3,000 bucks. Go into the public record if you've sold them to them and look at how much they've resold them for. One thing that's very interesting to me is people hire bird dogs and they say to them, I'll split the profit with you. You bring me the deal, I'll split the profit. Now, how do I know what happens with these? Because they don't have money to fund them. They bring me in to do transactional funding. The first leg is from the seller to the wholesaler that's going to give you $1,500 or $2,000, and maybe it's $5,000. And that's exactly what happens. There's a $5,000 profit. I fund that transaction. But what happens is he now has it resold to a buddy of his, and that's where the $5,000 profit comes in. So you get an A to B and B to C, 2 HUDs, $5,000 profit. But the person that's the C buyer has already resold it. He's actually the B buyer, but you don't see the third HUD. The C to D HUD is a $30,000, $40,000, or $50,000 profit. I did one 2 days ago. It's supposed to close today. It's a $45,000 profit. So if you're out there bird dogging and making a couple thousand or $3,000 on a deal, you're not going to make a living. What you need to do is step it up and understand the process, how you can get better deals. Now, let's look at where the listed or unlisted properties and transactions, which ones were more profitable. The average profit on the MLS listed properties was $28,633.33. The average profit on the unlisted properties was $30,843.77. So when people say to me there are no listed properties available, you're wrong. They're being done every day. I talked to a student yesterday. He said to me, I'm looking at the properties. I call the agent. They tell me they're selling at or above list price on every property they get, and they sell within 15 or 20 minutes. In our business, there's only two types of buyers. That's the people that pay too much, or the people that are patient and make large profits as wholesalers. So you can't compete price-wise. Let the guys who are paying list price or higher take their last hurrah, because it's only a matter of time. They're not wholesaling those, they're rehabbers, they're end users. And when they get into one or two properties and they start losing a lot of money because of hard money, cost overruns, code violations, or whatever else, they're out of the business. Just bide your time. You need to be the tortoise in this race and not the hare that doesn't finish. So I ask this question all the time, and I ask you again. Why not you? There is no reason that you can't do this. I'm Dave Dinkel, and thank you very much for watching this short video on my 30-day challenge.